There's a number on your pay stub most people never check, and it's quietly draining hundreds of dollars from your paycheck every year. Not because your employer is stealing from you, but because errors happen, deductions stack up, and most people just glance at the bottom number and move on. Today, we're going to fix that. By the end of this video, you'll know exactly what every single line on your pay stub means, how to spot mistakes that could be robbing you, and how to make smarter decisions with your withholding so you stop giving the government an interest-free loan every year. Let's get into it. Section 1. Gross pay. What you actually earned. At the very top of your pay stub, you'll see something called gross pay. This is the total amount you earn before anything is taken out. If you're salaried at $60,000 a year and you get paid bi-weekly, your gross pay each check should be about $2,308. If you're hourly, your gross pay is your hourly rate multiplied by the number of hours you worked. Simple enough, right? But here's where people slip up. They never verify this number. Payroll software makes mistakes. Hours get miscounted. Overtime rates get applied incorrectly. Your job is to look at this number every single pay period and confirm it matches what you were supposed to earn. Grab your timesheet, check your salary agreement, and do the quick math. 5 minutes of verification could save you hundreds of dollars over the course of a year. Section 2. Pre-tax deductions, the good stuff. Right below gross pay, you'll usually see a section for pre-tax deductions. These are deductions that come out of your paycheck before taxes are calculated, which means they actually lower the amount of income you're taxed on. That's a good thing. Common pre-tax deductions include your health insurance premiums if your employer offers group coverage, contributions to a traditional 401k or 403b retirement account, contributions to an HSA, that's a health savings account, or an FSA, a flexible spending account, and dental and vision insurance premiums. Here's why this matters. If you're contributing 5% of your salary to your 401k, that money never gets counted as taxable income for the year. So if you make $60,000 and you put in $3,000 to your retirement account, you only get taxed on $57,000. That's real savings. The key thing to check here is that the amounts listed match what you actually elected during open enrollment. If you signed up for a $200 monthly health insurance contribution but your stub shows $250, that's a mistake worth catching immediately. Now, before we go further, if you're learning things you didn't know before, that's exactly what this channel is built for. Subscribe to Money Minute for a quick money win every single day. Real, practical education that takes minutes but pays off for years. Hit that subscribe button and let's keep going. Section 3. FICA taxes. Federal mandates you can't escape. After pre-tax deductions, your pay stub will show you the taxes that were withheld. The first category is FICA, the Federal Insurance Contributions Act. This covers two separate taxes, Social Security and Medicare. Social Security is taxed at 6.2% of your gross wages, up to a wage cap that adjusts each year. In recent years, it's been around $160,000. Medicare is taxed at 1.45% with no wage cap. If you earn over $200,000 as a single filer, there's an additional 0.9% Medicare surcharge. These FICA taxes are not optional and they're not adjustable. Everyone pays them. What you're looking for here is simply accuracy. The percentages should match the current IRS rates, and the dollar amounts should be consistent with your gross pay. If something looks off, that's a payroll error worth flagging. Section 4. Federal and state income tax withholding. This is where it gets more interesting and more controllable. Federal income tax withholding is the amount your employer sends to the IRS on your behalf throughout the year based on your W-4 form. The W-4 is that form you filled out when you got hired, and most people fill it out once and forget about it forever. That's a mistake. Your W-4 tells your employer how much to withhold. If you withhold too little, you owe money at tax time. If you withhold too much, you get a refund. But that refund is just your own money coming back to you after the government held it all year without paying you any interest. The sweet spot is getting as close to zero as possible, meaning you neither owe a big check nor get a big refund. To adjust your withholding, you file a new W-4 with your HR department. The IRS has a free withholding estimator tool on their website that walks you through it step by step. Below federal withholding, you'll see state income tax if your state has one. 9 states don't, including Texas, Florida, and Nevada. Some stubs also show local or city taxes if applicable. All of these amounts should match what you'd expect based on your income and your filing status. Section 5. Post-tax deductions and other line items. Below the tax section, you may see post-tax deductions. These come out after taxes are already calculated, so they don't lower your taxable income the same way pre-tax deductions do. Common post-tax deductions include Roth 401k contributions, which are after-tax by design, certain life insurance amounts over $50,000 in coverage, garnishments if applicable, and union dues. Again, your job is verification. Every line that reduces your paycheck should be something you recognize and agreed to. If you see a deduction you don't recognize, flag it with HR immediately. It could be an error, or it could be coverage you forgot you enrolled in. Either way, you should know. Section 6. Net pay, and how to use all of this. Finally, we arrive at net pay. The number at the bottom, what actually hits your bank account. Net pay equals gross pay, minus all of your pre-tax deductions, minus all of your taxes, minus any post-tax deductions. Now that you understand every piece that went into that number, you're not just looking at a final figure anymore. You're looking at a full financial picture. You know how much you're saving for retirement. You know how much you're paying for health care. You know whether your taxes are on track or whether you need to adjust your W-4. You know whether your employer made any errors. This knowledge takes about 5 minutes per paycheck, and it compounds over time into thousands of dollars of better decisions. Check your pay stub against last month's. If your gross pay stayed the same, but your net pay dropped, something changed in your deductions. And you should know what it was. Here's your quick action plan. Pull up your next pay stub. Verify your gross pay matches what you were supposed to earn. Confirm every pre-tax deduction matches your elections. Check that FICA percentages look right. Review your federal withholding and decide if you need to update your W-4. And flag anything you don't recognize immediately. 5 minutes. Real money protected. That's what financial literacy actually looks like in practice. Not theory, not charts, just knowing your own numbers. If this helped you see your paycheck differently, subscribe to Money Minute right now. Every video is built to give you one practical money skill in minutes, the kind of education nobody teaches in school, but everyone needs. We'll see you in the next one.